It's great to have you, VJ. We had a discussion last night about hair on the print, and virtually nobody we talked to could find any. Did you find any overnight, I guess?
Not really. I think they had a pretty solid quarter. They're hitting on all cylinders. And thanks for having me on. I really appreciate it. But I think for AVGO, especially a Broadcom, the key is a big comeback on the rebound on the enterprise side, and up 30% year on year. And also strength on the iPhone, as you guys talked about. iPhone continues to be very strong for them. Even going out to the January quarter, they're seeing that grow another 8% sequentially. Also hyperscale. Cloud spending continues to be a big tailwind here. And that's all three are driving very good quarters and the outlook for AVGO going forward. And not to mention the massive $10 billion buyback that they announced last night. So.
Do you think, I mean, I know the story is Broadcom, but do you think it clarifies any of the back and forth we've been hearing about iPhone demand?
I'm sorry. Did we cut it out?
Can you still hear me, VJ? Are you there?
Yeah, I can hear you now, yeah.
Well, I know we're talking about Broadcom, but I wonder if you think that iPhone discussion sort of puts into perspective the demand debate about iPhone right now.
Absolutely. I think there's been a lot of, you raise a very good point. There's been a lot of cross currents on, iPhone being weak and iPhone being strong. I think this really puts that to bed. Especially our data points have been showing, if you look at China, their iPhone sales have been growing 50 to 60% year on year. The November Singles Day was a big event for iPhone. iPhone topped the charts on multiple China sales channels. So I think overall, very strong, tailwind for Apple and iPhone and the suppliers, AVGO, and we would also mention Skyworks and Qualcomm, all very exposed to Apple and the iPhone there. So,
Vijay, I wonder how you feel Broadcom is positioned versus, say, Marvell, which had very strong results just about a week ago. And I've got some questions about who might be taking share in some of the areas where they compete.
No, I think definitely from the data center hyperscale side, as we talked about, hyperscale spending continues to be very strong, and enterprise is seeing a massive recovery that's driving storage. Both are benefiting, I think, Broadcom as well as Marvell. I think Marvell has, we don't cover it. I want to say that out there, but Marvell obviously has exposure to 5G, and that you're seeing the spend on that being a tailwind for them. We don't cover Marvell. We don't have a rating on Marvell, but that said, from a hyperscale enterprise spend, you're seeing that benefit both Broadcom and Marvell. And obviously, near term, the focus has been on the iPhone, which has seems to have a very nice ring to it and good tailwind as you look out into the January quarter as well. So.
Vijay, when you were looking at spending, you note in your analyst note here that you sense some skepticism as customers could be building buffers against a backdrop of shortages. How do you see that coming into play? Does that mean that this could be a pull forward because of those concerns about shortages?
I think basically what we were trying to imply is if you look at hyperscale spend, that's been driven a lot by work from home. And we've seen 6 to 8 quarters of very strong hyperscale spend. And we are seeing that strength continue. And so that, might be lends itself to some skepticism, might be they're building a buffer capacity there or trying to, build some capacity in the event of future component or supply chain shortages. But that said, the enterprise side seems to be the real deal. I mean, enterprise is coming back. We are seeing the transition from that work from home to enterprise as people come back to work, fully vaccinated, et cetera. And so that drives the enterprise spending, which seems to be have much more legs there. But the hyperscale side, given that it's almost 8 to 9 quarters into that very strong ramp, just feels like there is probably some buffer capacity being built along those lines. So.
Hey, finally, Vijay, obviously, for a while, we've been paying attention to demand, revenue, margins. But given an environment where inflation is a much larger story, do you think in aggregate, in technology, it's going to be more about capital return, given what Broadcom said?
I think part of the reason is M&A is becoming a little bit, even though there is so much liquidity sloshing around, to have some M&A, you need some decent valuations as well. And obviously, many of these names, the universe is trading at pretty high valuations. So that tends to be a little bit of a headwind in terms of M&A. But that said, as we go forward, we expect to see consolidation. But along the way, given how strong revenues are, you're going to see big capital return, buybacks put in place. And also remember, in M&A, one of the bigger issues is cross-border M&A, and there tends to be very strong political overtones in this, in especially massive cross-border M&A. So that tends to be a headwind. So software M&A, as AVGO has done in the past, tends to be an easier one because it's mostly within the borders. And also, given, as you mentioned, the very high multiples, you're seeing companies focus more on buybacks and cash return near term. So.
Right. Fascinating. Vijay, appreciate it very much. Thanks for the help on this. Vijay Rakesh.
Thanks for having me on.